Alright, what's up guys? If this is your first time tuning in to this channel, my name is Chakits. I'm a licensed real estate agent out here in Las Vegas, Nevada. So this weekend I went over my real estate portfolio, and based upon the way that the market is going, I've decided that I'm probably not going to be buying anything this year, just due to the fact that interest rates are really high. I feel like the market is starting to slow down a little bit. It's starting to adjust based upon the current interest rates, and a lot of people right now just can't make that monthly payment. However, I've noticed homes around the 450 range is moving pretty quickly. It's very high in demand. Now, I took a look at my portfolio and I was thinking about repositioning, and this is what happens when you create a real estate portfolio. You want to take a look at everything, and you constantly want to make adjustments to your real estate portfolio. So there was actually a property that I bought in downtown Las Vegas. And if you guys don't know about downtown Las Vegas, it's more of a historic town, and these properties were actually like built in like the early 50s, and the property is located right next to like Fremont Street. So here's a property I'm going to show you that in 2016 I actually bought. It was actually a short sale, and this thing's actually a single-story home. It is 1,150 square feet. It's a 4 bedrooms, 2.5 bath. It was actually built in 1950. Now, normally I wouldn't think about selling my properties. I always want to keep my properties for the long haul. I love the cash flow. But one of the dilemmas I was really looking at is because the home was actually built in, 1950s. Las Vegas is very trendy, so the styles of homes constantly changes. The interior of the home changes as well. Also the condition of the home, because what happens is when you buy a home, you start to get the wear and tear. Remember, this was built in the 50s. We're talking about 70 years now this home is. So, the materials that they used back then is not the same as the materials that they use now. It's not as efficient. So, I feel like we are at the hype of the market, and that's the reason why I want to sell and liquidate this property to maximize top dollars. But here's the thing, I'm going to go through the numbers with you, if I should continue renting this property or if I should just sell this property, and let's go right through it together, okay? So I actually purchased this property for $72,000. However, it was actually listed for $65,000 during a short sale in 2016. But now keep in mind that when I purchased this thing for $72,000, I had to put down 20% because this was actually an investment property. So I literally had to put down $14,400. But also there was closing costs involved too as well. So closing costs was 3% back then, and that comes out to $2,160. Now if we take a look, the total amount here, cash out of pocket, would be $16,560. Now remember this number, guys. We're going to come back to this number because this number is important. This is how you figure out the ROI, which is your rate of return, right? Return on your investment. The total amount, right? If we take a look at our total closing costs, our down payment was $14,400. You take that, you subtract that by $72,000. My current loan balance at that time was $55,440. However, what's great about this when you have tenant in place, once they make payments every single month, what happens is now your principal balance starts to diminish. So as of today, my principal balance right now, 5 years later, is $51,729.66. Now my monthly payment on here, including PITI, which is principal, interest, taxes, and insurance, is a total of $383.86 a month. That's really, really good, right? So now let's take a look at this. So the mortgage, if we take a look at the mortgage that I pay every single month of $383,086, right? We've got to keep it all technical here. Okay, my rents right now, I just literally raised the rents to $850, which I know I can get more. However, I don't want to raise it too high too quickly, but I literally just raised it $200 more, right? And the reason why I kept it so low for so long is because When I did the short sale, I didn't have to do anything to the property, right? I kept the people in place and they just continued renting out the property. If we take our monthly mortgage, subtract this by the rents, our total income, right, is $466.14 every single month. So this is what I'm generating every single month, which is great. But we need to figure out what the return on investment based upon an annual. So you take this number, you times it by 12, because that's how much you're making every single month. So a yearly basis, I'm making $5,593.68. That's really good, especially in today's market. Remember, the average household income right now is about $56,000. That's about 10% of income. So that's really nice cash flow coming in, right? However, we really got to take a look at this. Let's figure out what our rate of return is. So based upon our rate of return, this is how we figure it out. We take our yearly income from the investment, you divide this by cash out of pocket, $16,560. Remember, if we go back here, we add the closing costs and the 20% down gives us $16,560, right? So that's how we got this number. You take that number and look at the rate of return on here. 34% on the money. You can't even find anything right now in the marketplace even at 3%. It's very hard because home pricing, the median price point for a home right now is $465,000. It is completely out of this world. Now, let's dive a little bit more deeper into this. Purchase price, remember I purchased this thing for $72,000, right? Now the sales comps, I already ran the comps. I wanted to see what I could actually get for the property. I believe I can get $325,000 on the high side. However, there's some work that needs to be done. So I figure, you know what, why don't we list this thing at $315,000, which is I think I could get an offer within less than 7 days within this neighborhood. Now, if we take the purchase price of $72,000 minus the $350,000 on the sales comps, I would literally net $243,000. But here's the thing, there's a lot more to it than that. So we got closing costs. Typically on the closing costs on my side would probably be about 3%. That's what's great about it when you're a real estate agent. So it's about $12,600. So net profit, $230,000 off this investment, right? But now there's more to it than this because at the end of the day, I'm really not walking away with $230,400. Here's why. I'm going to break it down even further because you really got to dive deep and look at the math. The math is going to tell you what to do. The math never lies. If I net $230,000, 400, right? I got property taxes. I'm sorry, not property taxes. I got taxes to pay. I've got 40% here on the high side because I'm a high income earner. I'm going to have to pay taxes on it, right? So if I pay taxes on here, I'm actually paying $93,760 just because I'm selling this property, right? Now, if this was my primary residence for a single person, right? If you lived in the property 2 out of the 5 years, you don't have to pay the capital gains tax. For a married couple, it's $500,000. However, this is not a primary residence. This is an investment property. Now, this is what I'm going to net, right, after taxes on this deal. $136,640. The question is this even worth it? But here's the thing. We got to dive deeper. We got to take a look at inflation. Inflation right now is about 8.5%. However, the feds, they're constantly raising interest rates so that way they can slow down the inflation. And this is the reason why I want to take advantage of what is going on in today's market, because once the market tanks, I don't think this property in this location, based upon the year and how outdated this home is ever going to appreciate at the $315,000. That's why I want to take advantage of this situation. So now let's dive deeper. If I net the $136,640, we got inflation every single year. This number is going to be important because the problem right now in today's market, I cash out on this deal, I have $136,000. I got to deploy that money back out into the marketplace. However, if you take a look at every single asset class right now, you can't really buy anything that's out there that's going to supersede an 8% interest rate. No matter what's out there, it's very hard to find. I'm not saying it's not out there, but it's very hard to find. Even the stock market, the real estate market, even Bitcoin is going down, right? So let's take a look at this because we got to dive deep, right? Inflation 8%, right, every year. So your dollar's losing its value. So this is based upon if I took the money, put it in my bank account, $136,000, right? And I don't find an investment property for the first year. My money's eroding away. I'm literally losing $10,931. So that tells me I need to hurry up and find a property, right? Now let's just say if I still don't find a property, by year 2, if we continue with this inflation, that's $21,000 from the $136,000. If I still don't find a property, that's $32,000 from that $136,000. Year 4, $43,000. So my money's literally rolling away. So that tells me that I need to find a property right away. Now I'm going to go back to this. One of the things that we can do here is on the net profits, right, of the $230,400, instead of paying this 40% of $93,000, we can literally do a 1031 exchange. But the problem with the 1031 exchange that I'm having today is actually going out and identifying a property within the next 90 days. So now I'm actually forced to go buy something. And there's really nothing out there. But this would be a great strategy to utilize the $230,000. But the chances of this happening in today's market is very slim. Okay? You have to have all the moving parts. I'm not saying that this can't be done. I would love it to do it this way. But I'm also thinking conservatively. So that's why I'm using this number, $136,000. Because if I decide to do a 1031 exchange, if I don't find anything, I'm still paying the taxes regardless. So now, worst case scenario, $136,000. Now let's move on. So we need to figure out, is it best for me to sell it and to net $136,000? Or should I continue to hold this property forever, don't ever sell it, and collect $5,500 a year? That's what I need to figure out. Well, this is how you figure it out. So if I held on to this property, right, forever, how long does it take if I decide to sell this property right now? It would literally take me 24 years of rent just to make $136,000. So the question is it better for me to sell this property now and chance it, reposition my portfolio, scale up to a bigger, better property, a better location, or should I just continue to collect $5,500 every single year? Guys, the math tells you the whole story. For me, it's probably best that I go ahead and sell that property, take $136,000, or do the 1031 exchange if everything works out at that $240,000, and reposition into a bigger, better property, a better location, that where I'm going to see a higher appreciation, higher rents. Well, guys, let me know in the comments below what you think I should do. If I should continue to hold and collect the money every single year. Also, keep in mind you get tax benefits with this too as well. Or should I just reposition my portfolio? If you guys like more content like this, let me know in the comments below. Other than that, please let us know in the comments, what should I do? Should I sell it? Or should I rent out the property for the rest of my life? Other than that, if you guys haven't had a chance to subscribe to this channel, go ahead and click that subscribe button. Also, don't forget to give us a like and a thumbs up too as well. Other than that, I'm Chakits Krulsawat with Simply Vegas. Peace.